Okay, we are breaking down Oracle's fiscal year 2026 Q2 results, which just dropped today, December 10th, 2025.
And this was a really fascinating quarter. You had these two completely different stories playing out at the same time.
Right. We're going to get into the massive cloud investment, that almost unbelievable $523 billion backlog, and then, why the market saw all this and still sold the stock off by 10%.
Well, let's start with the top line. The underlying growth here is pretty undeniable. Total revenue for Q2 hit $16.1 billion. That's up 14% in US
And
dollars.
your earnings per share, that delivered some massive upside. Non-GAAP EPS was $2.26, which is a leap of 54%.
But the GAAP EPS, I mean, that's the one that really jumped out, $2.10. That's a 91% increase.
Yeah, and we should be clear, that gap number got a huge boost from a strategic sale, which we'll get into. But it still points to this mix of real profitability and some very shrewd financial moves.
Well, that move almost pales in comparison to the number that I think just fundamentally changes how you have to think about Oracle's scale. And that's the backlog, the RPO.
The remaining performance obligations. Total RPO hit a dizzying $523 billion.
I mean, that number is just, it's hard to even process. It's not just that it's a 438% increase year over year. They added $68 billion in new backlog in Q2 alone.
$68 billion in 3 months. And this isn't a mystery, right? We know who this is coming from.
No, not at all. It's driven by these massive multi-year deals. You're talking about hyperscalers like Meta, tech partners like NVIDIA. They're all clamoring for cloud infrastructure right now.
Okay, so when you see a number that big, 523 billion, the immediate question for any investor is, how quickly does that actually turn into cash?
Exactly. And this is where it gets really interesting. The total RPO is a long-term number, but the key metric is the short-term RPO. That's the piece they expect to recognize as revenue in the next 12 months.
And that accelerated.
It accelerated dramatically. It hit 40% year-over-year growth. To put that in perspective, last quarter, that number was only 25%.
So that jump from 25 to 40%,
Yeah.
why is that single data point so important?
Because it completely changes the narrative. It's no longer a long-term sort of maybe someday promise. It becomes an immediate delivery problem. That 40% growth tells you that these huge deals with Meta and NVIDIA, they're not 5 years out. They need that capacity now, which means that revenue is coming in much, much faster.
And that justifies the spending, which we're definitely going to get to.
It's the whole story.
Okay, so let's move from the backlog, the fuel tank, to the engine itself. The cloud segment. Total cloud revenue hit $8 billion.
A huge milestone. It grew 34%, and that means cloud is now officially half of Oracle's entire business. So we can stop asking if they're a cloud company. They are.
And the infrastructure part of that, that's where all the AI-driven attention is focused. IaaS revenue was up 68% to $4.1 billion.
Wow. That growth rate is spectacular. Now, we do have to add some context. They are growing off a smaller base than, say, in AWS or in Azure.
Sure.
But 68% growth confirms they are taking market share, and they're taking it fast, especially in these really high-demand, GPU-intensive workloads.
You can see that AI demand written all over the submetrics.
Oh, absolutely. The GPU-related cloud revenue, which is your best proxy for AI and LLM demand, that grew 177%. This is why management was so focused on talking about the sheer physical build-out.
Can you give us a sense of that scale? Like, what are they actually deploying on the ground?
In Q2 alone, they delivered close to 400 megawatts of data center capacity.
In 1 quarter.
1 quarter. And they delivered 50% more GPU capacity than they did in Q1. The customer numbers tell the story. Uber's using over 3 million cores on OCI. T-Move got close to 1 million cores just during Black Friday and Cyber Monday. This isn't theoretical capacity. It's getting used immediately for mission-critical stuff.
And a big reason they're winning these workloads is their multi-cloud strategy. The fact that they're willing to put Oracle services inside a competitor's cloud.
That strategy is it's a home run. Multi-cloud database consumption surged by 817%.
Wow.
They're basically saying, look, we know you use AWS. We know you use Azure. You don't have to move. We'll bring our best database tech to you. It's brilliant.
And they simplified the commercials, too, with that universal credits program.
Yes, that was key. You just commit your money once, and then you can spend those credits on Oracle database services wherever you want, OCI, AWS, Azure, all at the same price. It just removes all the friction.
So this infrastructure strategy connects directly to a big financial move they made. Let's talk about that $2.7 billion pre-tax gain that boosted the GAAP numbers.
Right. That gain came from selling their entire stake in the chip company Ampere. And this wasn't operating income, it was a one-time cash infusion from selling off an asset.
And Larry Ellison explained this as a deliberate shift to what he called chip neutrality. What's the thinking there? Why sell your own chip design business right when AI hardware is everything?
Ellison was very direct about it. He said designing their own chips just isn't strategic anymore because the technology is changing way too fast.
So they'd rather be agile.
Exactly. The new commitment is to work closely with everyone, NVIDIA, AMD, all the major suppliers, so they can get the best chips and not be locked into their own designs. It's about flexibility.
And you have to assume there's a capital component too, right? They avoid all that R&D and manufacturing spending on chips.
So they can pour every single dollar into building out the actual data centers. That's the trade-off. They're giving up control over the chip architecture to gain speed and capital efficiency in deployment. It's a pragmatic choice to serve that giant backlog.
And this neutrality plays right into their new AI strategy, which isn't just about training models.
Now, this is maybe the most important long-term point. Ellison said, look, training huge models on public data is a big business. But he thinks the even bigger business will be AI models reasoning on private corporate data.
Because that's where the real value is.
That's where the secrets are, the productivity gains. And Oracle is sitting on decades of the world's most valuable corporate data in its databases.
Which brings us to their new product here, the Oracle AI Data Platform and the AI Database. What makes this different?
It's about unification and security. The platform is designed to connect to all of a company's data, not just Oracle data. Data sitting in Amazon S3 and a MongoDB database and Snowflake.
All of it.
How do they actually do that? How do you unify all that?
Through a process called vectorizing the data. So you're basically taking all this different information, text, records, images, and turning it into a common mathematical format, a language that the large language models from OpenAI or Google can understand.
And the big promise is that the AI can reason across all these different sources while keeping the data totally private and secure in your own environment. So you can ask one question that requires pulling information from 5 different systems, and you get a single unified answer. It breaks down all the silos.
Okay, let's shift to the other half of the cloud business applications, or SaaS. It doesn't get the AI headlines, but it's still a massive, steady business.
It is. Cloud application revenue grew 11% to $3.9 billion. And that 11% is solid, but the real story is inside the strategic back office apps.
ERP, HCM.
Right. That segment grew 16%. Fusion ERP was up 17%, Fusion SCM up 18%, and the industry-specific clouds for healthcare and retail, they grew even faster at 21%.
And there's a pretty strong signal that this growth is about to pick up even more.
There is. You look at the deferred revenue for applications, it's a great predictor of future revenue, and it grew by 14%.
So deferred revenue is growing faster than current revenue.
Exactly. The 14% outpacing the 11% is a clear signal from management that they expect SaaS growth to accelerate in the next few quarters.
And they've made a big organizational change to help push that along, this one Oracle idea.
Yeah, the one Oracle go-to-market shift is huge. They've basically combined all their separate application sales teams into one single global organization. So instead of selling you just an ERP system, they're now selling you ERP plus HR plus supply chain, all in one much larger deal.
It simplifies things and drives up the contract size.
And the AI halo effect is definitely helping here too. They have over 400 AI features already built into the Fusion apps. They mentioned that 274 customers are already live on their clinical AI agent in healthcare, that's pretty impressive adoption.
Okay, so we've laid out a pretty strong case. The backlog is exploding, IaaS is on fire, SaaS is accelerating, and yet the stock dropped 10% after the announcement.
Right.
This gets us to the core tension of the quarter, the immense cost of all this growth.
This is the other side of the coin, the financial risk. I mean, look at the cash flow. Operating cash flow for last year was solid $22.3 billion. But the free cash flow for Q2, it was negative $10 billion.
A $10 billion burn in a single quarter. That's a staggering number. How do they justify that?
It's 100% driven by the need to build out capacity for that RPO. Capital expenditures CapEx hit $12 billion in one quarter. That is the bill for the data centers and the GPUs needed to serve Meta, NVIDIA, and everyone else who just signed those huge deals.
And the market freaked out because they also raised the forecast for future spending.
That's right. They now expect to spend $15 billion more on CapEx for the full fiscal year than they previously thought. This is the financial consequence of that RPO growth accelerating. They have to spend faster because the revenue is coming faster.
So for an investor, the question becomes, how do they fund this without, wrecking their balance sheet?
Well, management was very clear that they plan to maintain an investment-grade debt rating. They're looking at ways to soften the blow, like leasing chips instead of buying them, or having customers bring their own hardware. And they pushed back hard on some analyst models that were projecting like a $100 billion build-out, saying it would be substantially less.
So the takeaway for you listening is that this is a conscious investment choice. It's not a sign that the business is broken.
Not at all. They are choosing to sacrifice short-term free cash flow to grab market share and lock in decades of future high-margin revenue. It's a calculated gamble.
Let's close out with the forward guidance then. How does this all translate into their outlook?
Well, that accelerated backlog conversion is showing up immediately in the long-term forecast. While the guidance for this full fiscal year, 2026, is unchanged at $67 billion.
Okay.
They're now projecting an additional $4 billion of revenue in fiscal year 2027. That's a direct result of being able to monetize these huge new deals faster than they originally planned.
So that's a tangible payoff for all this spending.
It is. And for next quarter, Q3, the guidance is also very strong. They're guiding for total cloud revenue to grow between 37 and 41%. Total revenue up 16 to 18%.
So wrapping this all up, what's the big picture? You've got these incredible bookings and cloud growth on one side, but it's countered by this massive CapEx spend and negative cash flow, which is spooking the market.
I think the whole conversation comes down to this unique gamble Oracle is making. They're spending enormous amounts of cash now to turn that $523 billion backlog into revenue later. Their whole financial model is shifting from a high-margin software company to a super capital-intensive cloud infrastructure provider, all fueled by this AI boom.
And the integration of that Oracle AI data platform, the one designed to unify data from everywhere, Oracle, competitors, custom apps, it really suggests Oracle is betting the ultimate prize in AI isn't just the model. It's the ability to turn all that fragmented corporate data into a single intelligent brain. Let's think about the competitive advantage. If you're the only company that can provide that truly holistic view securely across every cloud, that's something to think about on your own.